Hello everyone, welcome to Road to Millionaire Retirement. My name is Andrew and thank you for checking out this channel and watching this video. So in this video, I want to show you guys how much money that you need to have in your retirement account or combination of retirement account and investment account to earn enough dividend to retire thoroughly depending on your dividends. Now, according to the Bureau of Labor Statistics, the median wages for workers in the United States is about $51,000 per year. Now, what I did was I rounded that up a little bit to $55,000, and that means your goal is to earn $55,000 of dividend every single year. Now what I did was I made a chart between the dividend yield cost from 1% to 10%. So I want to show you guys an example of the dividend yield. Let's say the stock price is $100 and the dividend yield is 10%. That means that annual dividend pay is $10, which means for every 100 stock price of this company you own, you'll get $10 in a year. And if the company pay quarterly, you divide that 10 by 4, so that'll be $2.50 every quarter. Now let's change the dividend percentage a little bit. Let's say you had the same stock price of $100 and the dividend yield is 1%. Then that means your annual dividend pay is gonna be $1 per every year, which means you'll be getting 25 cents every quarter. Now you might be asking, well, if that's the case, why not just go with this company that paid the highest dividend yield? The problem is, I think, a little bit more complicated than that. The dividend yield comes out of the company's earning, and if the company is spending majority of their earning into dividend, then they're not gonna have enough money to reinvest into the company for the company to grow and to make more money as the time goes on. So, and also on top of that, depending on the company, they'll just try to attract the investor with the high dividend pay, and the company itself might not be considered safe. So it's very risky to just jump into the high dividend paying company and expecting them to able to consistently pay that much amount going down the road. If you plan to just invest in this high dividend paying yield company for a year, maybe it might be okay, but there's no guarantee that even within the year the company is going to be able to maintain that. The stock price of the company could fall and the dividend yield could still stay the same, but that's very bad number from the company's perspective or from investors' perspective. So whenever you guys decide to choose to invest in a company, you guys gotta need to make sure that you guys are looking at the numbers and that the company is healthy enough to pay the amount of dividend that they are paying. Because paying too much, like I said, is not good for the company because they're not gonna able to invest in themselves to make the company grow for better future. Now I want to start with the 1%. If your dividend yield is 1%, then you have to have $5,500,000 in order to get $55,000 dividend pay, which to me sounds, which is pretty a lot, 5,500,000 of money to have in order to get $55,000 of dividend. But as you'll see, as the dividend yield percentage increases, the amount of money that you need to have also kind of drastically goes down. So for 2% dividend yield, you need 2,750,000. For 3%, you need $1,833,000. For the 4%, you need 1,375,000. For 5%, you need 1,100,000. 6%, you need 916,000. 7%, you need $785,700. 8%, you need $687,500. 9%, you need $611,100. And for 10%, you need $555,000. So as you can see, as the percentage increases for the dividend yield, the amount of money that you need in your account also goes down pretty drastically, especially from 1 to 2 million, which the difference is about almost $3 million. So having your dividend yield to certain percentage will drastically determine how much you need. So I figured, you know what, let me check my Roth IRA account and see what is my average dividend yield is. As you can see, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I have 11 companies that pays dividend. And what I did was I added all this percentage up and then I divided by 11 to get my average percentage. And that percentage came out to be 3.85%. So that's close to almost 4%, which means that if I want to have $55,000 of dividend pay a year, then I need to have about $1,375,000 in my investment. Now, with that said, with all of this said, you have to understand that sometimes the dividend will go up, sometimes the dividend will stay the same, sometimes the dividend will be cut by the company because maybe the company finally realized, hey, we cannot afford the amount of dividend we're paying. So as a result, the company might reduce the amount that they pay you, or they might just cut drastically. So that's something to consider when you guys are investing. That's why I also mentioned in the beginning that you want to invest in a company that's healthy to pay the dividend that they afford to pay, because that means that as the company is growing, they'll be able to increase the amount of dividend that they're paying you. Well, that's gonna be it for this video. This is my first attempt to kind of go into the dividend pay in a chart per se. So if I missed out on something or information, comment below, let me know, so that way I could go back and make an update regarding this kind of video. If you enjoy what you saw, share with your friends and family, so that way they have an idea what they need to do and what they need to have. Also, if you'd like to follow my journey to my $1,000,000 retirement goal, then hit that subscribe button so that way you guys don't miss out on future videos. Thank you again for watching, and good luck in the stock market.